wants to check it out. All right, welcome to class. We've had different strategies that we've taught so far before now, and we quickly want to backtest all those strategies right now, so you will understand what we've been doing so far, with strategies we've been teaching. Do you understand? And so far so good. We've taught about the A plus setup, like I told you guys. They will talk about, I think this is it. We'll still have them here. This was from the last class, right? So in case you've forgotten, this is the A plus, how you trade A plus setup. This is it. Then the criteria it needs to meet. This is it. And also this. Then also we talked about the breaker block, which is not here right now, but I remember teaching you guys the breaker block. So there's something I'm going to teach you guys. Um, Sorry guys. Are you seeing my notification? Hello.
Yes, sir.
Hope it's not distracting you guys. I'll just take it chill. Don't get distracted, please. So I'll teach you liquidity, like different forms of liquidity, so that by the time we're doing the back test, it will be easy for you to spot out the liquidity because we will be deciding the trades we are going to take. If we're going to take those trades or we're not going to take those trades. So because we're going to be replaying all these ones, we're going to replay everything back. You understand? So we will now decide, okay, are we taking this particular trade? Are we buying or selling? So for you to know if we're buying or selling, you need to have to understand the A plus setup, the breaker block, and the concept of liquidity. Trend line, we said there are different types of liquidity, in which we said one of it is the trend line liquidity. The trend line liquidity. That's one form of liquidity we have in the market. The trend line. Can you see the is it too tiny? Should I increase it? Please, I need you guys to
Yes,
respond.
sir. Yes, sir.
Can you see it now?
It's okay like this, sir.
Okay, good. So we have the trend line liquidity, and also we have number two. Number two, we have the double top. Yeah, double top liquidity. Number three, that's what we mean double top, like equal highs, equal lows. It can be double bottom, like what you guys call W and the M. So the liquidity resting on the both sides. Then we have the what's it called now? The range liquidity. I think I showed you example of this um in in the group, but we'll still do it here. So these are the different types of liquidity that we have in the market. So I'm going to show you guys now what they all mean. So what we mean trend line liquidity, it simply means something like this. You already know it. So just follow. This is it, your trend line, giving you higher highs, higher low, higher highs. I mean, no, sorry, lower, lower low. Keep giving you lower low, lower highs, lower low. Then all of a sudden it breaks this particular flow, right? And the next thing you'll be expecting is once it breaks this particular low like this. So what you'll be expecting is that this price is going to retest. It's going to retest this breaker block here, maybe a little below it. Yeah. Or sometimes when you have an A plus setup around it, it goes down a bit like this. Do you get? So when you have something like that, all you are expecting is to buy this particular pair. And once you buy it, you are buying it to clear this trend line liquidity that is here. Do you get? So it clears off. So your TP now comes to this particular place. All right. So this becomes your buy, right? Then your stop loss is below. You already know this one very well. Then all the way down to your trend line liquidity here. So why do we call it trend line liquidity? Because of from here, here like this, we broke out of trend line. We broke out of trend line. We tested, then you take it, simple of trading, trend line liquidity. Any question about this?
We're how familiar with this, sir. I think
You're all
we get it
familiar with
right.
this. All right, good. So we have another one, the double top liquidity. So when you have a trade of your peer is moving like this, right? It's moving like this, right? It's moving like this. So when you're anticipating to take this kind of trade, do you know there are this place now is serving as a resistance. Here too is serving as a support. You know that, right?
Yes, sir.
Yes, sir.
Mhm. So this place now that is serving as a resistance and a support, this place, most people are waiting to buy or to sell to that particular place and take profit like this. So people are waiting for price to come back to this zone now and sell. You understand? So people are waiting for price to come back to this other zone and buy, right? So, but market already know. Sometimes some people are waiting for it to break out so that they can continue buying. Some people are waiting for it to break out so that it can continue selling. But most of the time, what does market do? You see, market will come like this, eh? Buy from here, right? It will take out these people that are here, right? It will go like this, take them out, right? Then come back inside this particular place. It will come back inside like this, go like this, right? Then come back again to come and take out all this way here because there are liquidity there too. There are sell stop liquidity that if it continues down, it's going to keep selling. It will take them along, all of them, it will just clear them all the way down. You understand? So this type of liquidity, people that are waiting here also to buy, it will take them out. People that are already waiting here to sell, it will take them out and still sell. So all these, their liquidity resting below and above it. So this kind of liquidity are called, what's it called now? Uh, double tops liquidities. Do you get? So this is a type of liquidity also. Do you understand? So then we have a range liquidity. You already know what a range liquidity is, don't you know? You already know what a range liquidity is. It's just similar to that
Yes, sir.
double top liquidity. Range liquidity, when you see market moving one side, I think network. So when you see market moving to one side, it's moving like this to one side. You see people will keep buying, selling, keep buying, selling, keep buying, selling, buying, selling. But I don't like ranging market except it's on the higher time frame so that in the lower time frame you can still buy and sell. Yeah. So when you have a ranging market like this, always observe there's always either a demand block here, or a supply block here. Always observe. That's what I've observed over time. That anytime there's a range liquidity, there is always either a supply block below it or above it. a supply or demand block, either above or below it. So what you will not be expecting from that supply and demand block is that the market will come and take on that block that is here, or take on the sell block that is here. You're just waiting for it to break out of the range. If you go and check the V50 chart I dropped the other day that we were waiting for a breakout, you saw it was ranging. So me, I was waiting for it to break out. Do you get? So I didn't even now know when it broke out to the top. If I saw when it broke out to the top to go tap the supply liquidity, I would have been on that sell because I know the sell would have broken out of the range, which it eventually did. And up till now, I think it's still even selling. Do you get? So oftentimes when you see a chart ranging like that, all you need to do, just go and check for a demand block, let's say supply block at the top side. There's definitely a supply block at the top side like this, or there is a demand block at the lower side like this. Do you get? There's a demand block at the lower side like this. I'll also check the market structure. So what you will now see happen is that market can just, at the next turn like this, market can just go and clear off all this liquidity that is here. It will take them out, all of them, like this. Then come back inside, just like that range liquidity. You understand? Then shot all the way down. Shot all the way down. So this is what range liquidity is about. Do you understand? Then there's something called inducements. So one thing is about you studying what liquidity is, what inducement is. So if you don't understand what inducement is, what liquidity is, you become the liquidity that the market will use to make it move. And if you are continuously being the liquidity that the market is using to take its move, okay, I think Comrade is having a bad network. So if you're continuously being the liquidity that market is using to take its move, it only means that you are a bad trader, because what really moves the market is liquidity. And if you still can't spot liquidity, you become the liquidity. You keep hitting stop loss all the fucking time. And that's not the kind of trader you want to be. So you need to understand the concept of liquidity. When you see a range like this, instead of trading within the range, if you are trading within the range, yeah, okay, you be careful. You understand? But oftentimes I wait for this kind of entry so that you just shut it down. Then if you see a trend line trading also, the same thing you get. I wait for the breakout instead of trading within the trend line. You can still trade within the trend line, but sometimes I like it better when it breaks out and it gives me a retest to an opposite direction. You understand? So this also, I wait rather for it to break this place first before coming down. Then another point is that what me I've studied in my own personal study in the market is that when you see liquidity resting below or above a POI, maybe a demand block or a supply block, whether within the chart or any place, just know that that particular pair, that particular trade will hold. This is from personal study now. Like I've not seen it anywhere. Just like the trade I showed you guys today that it faked me out. You see that the trade still went. You understand? The trade still went to the direction I predicted it was going to go to. I think that trade was on Euro NZD, right? Euro NZD is kind of becoming one of my favorite. It's becoming my favorite. Look at it here. Look at it here. This was the trade. There was a 15 minutes. Look at it. There was a 15 minutes demand level, right? And there was liquidity resting below the demand level. So it just told me that this thing is going to buy. Do you understand? So when you have liquidity, you understand? When you have, can you all see my screen?
Yes, there's one corner I did have a network issue.
Okay, because Comrade seems to not be seeing my screen, so I wanted to be sure that
Yes.
the rest of you are seeing it. So when you see liquidity resting below a demand level, just know that that demand will hold. Or is resting at below the supply level, just know that the supply level will hold. And you guys, you already understand what a breaker block is, right? I taught you guys what a breaker block is.
Yes, sir.
Yeah. So like this, if you see a breaker block, you are supposed to be able to recognize the breaker block. I'm not supposed to stress myself to, or let me just ask today now. Show me a breaker block in this chart and I will point it out. Or let me just show you guys in the chart what a breaker block is. Right? Or can you guys show me or I should show you guys? Should I give you an
You
example?
can go ahead and show us. Let's go
Okay,
give us an example, sir.
yeah, it's something like this. This is a breaker block now. Look at it. This is a breaker block. You see, it created this, then it broke out like this. So as it broke out like this, what you are expecting is that trade should not pass this particular zone like this. Do you understand? What you're expecting is that as this candle closed below here now, you are buying, or sorry, you are selling it. So as you are selling it, what you are expecting is that trade will not go back to come and take out this particular high. Then you short it down to maybe your risk to reward ratio, maybe 1:3. Do you understand? Look at it. Look at the low now. This is the low. So you are looking at, okay, this is even a trend line liquidity set that we just spotted out. But you see that it moved from a breaker block. Do you understand? It moved from a breaker block. Look at what I'm trying to say. If you draw here now, you see that there's a trend line here in a way. If you look at it, you see there's from here to here, there's a point, right? There's a point. Do you get? Forget this one here. Forget this one. This is the fake out. This is the fake out. This one, this is the trend line, the pure trend line. Do you get? So this one now, you see, it came, it broke the trend line. You understand? And it retested a bit here. Look at it very well. Are you seeing it? This is to tell you this is
Yes,
the
boss.
correct trend line. Not even this one. This one was a fake out to have made people sell early. People would have entered this trade early and sell because they see that, okay, this high did not take out this high. Okay, yes. And anybody that sell here, I won't blame the person. I won't blame the person. But somebody that know what he's doing will know that the first move is always an inducement. Understand this thing. The first move of any trade, that's what me have come to understand, that the first move you see when you see market want to break trend line, don't always trust that first break that the market break the trend line. The market might just move from there up again. Then once the market move up again, it will take you out, and at the end of the day, still come back to come and sell. So you now be saying, be like say they plan me, they plan me. Yes, they plan you. Market always plans you. Market knows what you want to do. So what you allow it first does what it wants to do. Once it give you that first move that it wants to break out, do you get? Allow it go. If you lose the trade, fine, it's okay to lose the trade. Do you understand? If you don't lose the trade, good for you. The market, you see that the market will come back to your entry or even go above your entry level, then create the right movement that it really wants to move and start moving in that direction. Do you understand? So let me quickly, you see this is a trend line liquidity now. When market moved from the trend line liquidity, you see that after you take this entry from a breaker block, you can still take an additional entry again at the retest of this place here. This is another entry for you. Then your stop loss now is below here. It's above here, sorry. Then you can then now adjust this your stop loss, almighty stop loss that is here, to break even here, even into profit. You can then move it to break even or into profit like this to be on the same level with this one because you are not expecting price to come and take out this one again. Else the market will not work. So you then target again below. And you see the trade I took on this particular pair. Go and check the chart that I sent to you guys last week. You see that it is the same thing I did. I took one particular trade, then I broke even on that trade. Then I used the profit of this one that I've gotten to take an extra trade that kept running. So the money I would have gotten from here to this particular place, because I added another position, when it got halfway, I already made the money. Do you understand? I already made the money. It was here. Look at it. It was on this trade. The first trade I took was here. I took the entry here from this breaker block, right? I took the entry from this breaker block. So when I took the entry of this breaker block, then the market gave me another breaker block here. Do you understand? And this is a supply level, right? So, and I was targeting this particular place here. This is where I was targeting, this low here. That was where I was targeting, right? Then the market now gave me, because my stop loss was here, right? The market now gave me another breaker block. So I entered again from here. Then my stop loss was below this high. Did you get? That was where I entered from. Then same targeting this particular zone. Go and check my
Yes,
chart
sir.
that I
I want to ask
sent
a
to you
question,
guys.
sir.
Okay.
The question I want to ask, sir, is I understand the time the management is using forex these
Your
days.
voice
Two breakout.
your voice is icon.
Sorry, sir.
Okay.
Apologies. But
We
what
can
I
hear you now.
understand, yes, what I discovered me is this breakout block we're talking about, sir. What's the difference between breakout block and double top? I still don't understand the difference between breakout block and double top because to me sometimes it looks like double top. So I was unable to differentiate, sir.
Okay. A double top, a breaker block. It's more like wait, look at this one now. See the way it's looking, right? See the way this is looking, right? It's more like
Yes.
market gives you a resistance that a trade can stand on. That is your breaker block. It's more like market gives you that resistance that look at this one. This is the head and shoulder that signifies, okay, buy this market. This one now, if you look at it, it is a head and shoulder. If you look at it in a way, look at it. This is a shoulder, a head, a shoulder. Then immediately the market breaks below it, it becomes a breaker block. It becomes a breaker block that the market can come back to rest on. Do you understand? It's more like the market having a support or resistance level to stand on. That's what the breaker block simply means. You understand? It does not have one particular pattern. Do you understand? It has to have it can even be just one candle. Okay, let me show you the perfect example of a breaker block. It is a mitigated order block. Simple as that. Simple as that. A mitigated order block. Look at it now, like this. So this is another block. So once the market breaks this one like this one becomes a mitigated order block. Once the market breaks it like this. We're running out of time now. When would they start? I just start explanation. I never even do back test too. But you guys are learning something, right?
Absolutely right, sir.
Okay, because I want you to understand it before we go and back test so that by the time we're back testing, you will easily be spotting out the trade for me. They will be taking it. Then we'll start testing all the strategy. That's why I'm explaining it to you guys right now. So we'll not have much complications. I think I did this in the last class, but I think we didn't go this deep. I didn't explain liquidity concept for you guys. I just explained strategies for you. So this one now is liquidity concepts I'm giving you guys now so that you will spot liquidity. Once you see liquidity, the next thing you are looking for is the next POI. Once you see breaker block, the next thing you are looking at is for the trade to pull back to that breaker block, which becomes your POI. then you trade from there. Once you see a trend line liquidity, you already know how to trade that one. Do you understand? So a breakout block now, as I'm talking to you, is once a trade, this is another block now that is supposed to hold a trade. But no, the market now broke the other block. So it becomes a breakout block that when market is coming back, there must be a zone around here that it will rest on, it will hold like this, and it will keep going. That is what a breakout block is. Do you understand? So it's the same thing that you are seeing here now. This market, look at it. This is a breakout block now, right? This market, it broke out from here. It went up, right? You see, it came to rest on it. So this is a breakout block that this market is resting on. Look at it. Is this a breakout block that this market is resting on? So it now came again, broke out again from this. It broke out of this range, right? So this place again becomes a breakout block that the market is resting on. You see that the market came now on top of the breakout block, it rested. So if you're going to take this trade now, your for this trade to be very valid for you, that you know that okay, this trade is going to work. Although you need to wait for confirmation, then so that the market they will have a rejection from there before you enter. So it will be like this: you enter from here, right? Then it will not be below the breakout block. You get. Then you target your risk to reward 1 ratio, maybe 1:3. Yeah, let's say 1:3. This is 1:3 here. Then you take it. You see, it hit TP. Okay. I think it didn't touch the TP totally. Okay, that's 307. Let's say 1:3 should be here. No, 1:3 should be here. Exactly. So you see the way he hit the TP nicely without you stressing yourself. It's like you use $10, you got $30. You use $50, you got $150. So if you are trading Profem, you are trading 1:3, 1:3. If you are trading 150 and you have a profit target of 400 to make, if you do 1:3, 4 times, I mean 3 times, you already made the money. I don't know if you get. If you did 1:3 here, you did 1:3 here. Even though this one is more than 1:3, look at it. This one alone is 1:4. This one now from the beginning, this particular one from the beginning is more than that. So if you did all of that, you see that you will be able to pass your account in no time. Even if you are trading your personal account, you'll be able to make enough money trading from a breakout block. Just know when it leaves a breakout block. You will know, okay, when to now take that particular trade. Do you understand? So, okay, again, now let's look at this sheet like this. Right? Look at it. To me, I took this. This was where I was looking at. Say, okay, this is where the trade will get to. You understand? Because there is a breaker here. This is an order block, a failed order block that the trade broke. So I was expecting that once the trade gets here, it will respect the breaker block. But I was not on chart. I was not on this particular chart this morning. I would have been on this sell trade. Do you understand? I would have been on this sell. So it got to the breaker block here now, a failed order block. And you see, market easily just reacted to it. It started selling. It's very easy. Do you understand? So it's more like a trend line. A trend line started from here, from the breaker block. Then the market bought from here. I went to go and feel the trend line from where it started from. It went back to come and feel this trend line. It will always feel. It is liquidity. It is flow to the market. Do you understand? It is flow. So if you understand this concept of liquidity already now, I think we'll be able to now go further to start practicing or backtesting the pairs that we have in our okay. I was trying to explain this before you asked the question you asked. I was trying to explain this. Don't mind my chat too. Hope you are seeing it, although it's orange and gold and black. Can you see it?
Yes, sir.
Yes, sir. Yes, sir.
Okay, good.
Most of us
So
have
what I
gold and
was,
black.
you said?
Most of us have gold and black in our charts.
Yeah, so you should be able to. So I also dim my background to like ash because of light reflection. You understand? So another skill is about you managing your trade, managing to know, okay, this is where trade is going to move out from. Normally, I already did the head and shoulder, and I was targeting this place on a very nice view. I said, okay, let me just relax. The trade was going to come here. But then, because I have the knowledge and I have now about the liquidity concept, right? Already, what I explained to you guys just now, when you see liquidity below a demand block or a supply block, know that it will hold. So I saw this liquidity resting below this demand block, right? So I now said, okay, I think I need to close this trade. I had to close this trade. I had to close it. Do you get? I had to close this trade. When I closed the trade, I now bought. I now bought this trade. After it gave me this nice confirmation and it retested, I took the trade from here. Do you get? Then my stop loss was kindly below the breaker block, right? So what made me left the trade was when this trade pushed up. Let me take this off so that you'll be able to see it. So you see this trade pushed up, right? Right? Then it came down. So when it came down to this place, so I was expecting that it is supposed to keep, we came down to this place. It's supposed to keep buying, right? I was expecting supposed to keep buying. But it did not buy. It did not keep buying. It went up, gave me more like a confusing head and shoulder. Then it just gave this sharp sell to now break this particular low. So me now, I now forgot that the breaker is not over. Look at the breaker. The breaker is still there's look at it. Look at breaker. The breaker is still here. So my stop loss should be below the breaker. So as long as it did not break the breaker, you understand? As long as it didn't break it below, my trade is still good. But because I saw this sharp bearish candle, I closed from here. Only for me to come back to the chart this morning and saw that my trade went to go and hit my TP, which would have given me good risk to reward ratio this morning. It pained me, but they feel well. This is a pain zone. Like the market is a pain zone. So if you don't master your own emotions, you keep feeling pain all the time in the market. Do you understand? So as long as your breaker block is not violated, your trade still continues. But this was more like a change of character for me. Yeah, I won't lie. It was a change of character for me, but it was a fake out. So he gave me a fake out to take me out of the trade, then it still continued going. So knowing all these things now, liquidity below a supply demand blocks or the breaker blocks, trend line liquidity, double top and all the like. So I believe by the time we come back in the next 10 minutes, we'll just go straight to back testing. This one, oh, they do back testing, and we never back test. It's not nice. So we'll just go straight to back testing. So it's less than 1 minute. In the next 10 minutes, I'll call back. So we'll continue. Are we good?
Yes, boss.
Oh, yeah, now. I'll see you guys in the next 10 minutes. Ciao.